in early 2008, we know that banks had to recapitalize themselves. They had to sort out bad debts. It was a really tough environment for banks. Things turned around quite dramatically, despite the fact that we know that we saw the financial crisis playing out as well. Your overall perceptions on Kenya's banking environment? Some say that consolidation is the next step.
Thank you for having me. It's a pleasure for me to be here. I think Kenya's banking sector has weathered fairly well the crisis, and the issue of consolidation is open to the market, basically. It will be a natural move after banks are looking for better business. So I wouldn't be surprised if there is some consolidation in the market, but it will happen naturally.
Well, pressure from the central bank has been quite rife in terms of most banks dropping their lending rates. However, we have seen interest rates in Kenya dropping down as well to 6%. The most recent interest rates decision kept rates unchanged at 6%. But also just keeping in mind that we have seen loan growth coming to the fore. Gross loans up 4.3% in the 3 months to August. We've also seen impairments starting to taper off as well. Does this mean that we'll be seeing more growth prospects for the banking sector in Kenya, or do you think that there are a few headwinds ahead?
No, I think growth will continue to increase after a taper off with the crisis. It's very natural to have the banking sector be a bit more timid, if you will, after the crisis that happened throughout the world. So I think it's quite healthy the way it's increasing. I think it's going to continue to increase. But banks here, as in the world, are being very careful, or more careful in how they lend. They don't want to be burned. And luckily, the ones here survived the crisis very well. So they just don't want to be going to the other side of the fence.
Well, Fitch,
so I think this is going to grow.
Well, Yira, Fitch says that the asset quality of Kenyan banks remains the overall weakness. Do you agree with that?
I'm sorry, can you repeat it?
Fitch says that the most important thing that many banks have to focus on, in other words, their biggest weakness is asset quality.
Yeah, this is a relative term. I mean, if you think about how asset quality was in 2006 or 2004, it was 28% non-performing loans. And now we're down to 10% or 8% or so. So a lot has happened in the system. Now, why this is still a focus of attention for banks? Because this is the business of banks. When you have credit growth that was growing really fast, normally the portfolios don't show what the problem is. So when credit growth is lower, then the problems start to appear. Luckily, credit growth has started to increase again, so that part of the equation is not affecting, but you also had a period of lower economic growth, which normally is a problem. So I think that was more the case a year and a half ago, and luckily they survived that problem. Just a second.
Yeah.
Well, so I don't think it will be a big issue.
Well, you're also looking at capital adequacy ratios, taking a look at Basel III, because that really is topic of conversation. How is this going to affect the Kenyan banking system? And also interesting to note that the government has said that it intends to divest from public financial institutions.
Mm-hmm. This, the Basel III, much like Basel II, will affect banks in developing countries more in a lower manner than other countries. This is just because of the type of instruments, because of the type of instruments that our systems have. Now, that doesn't mean that it's not going to be affected. Why? Because there are two crucial factors, both in Basel II and Basel III, related to the way risks are assessed. And whenever banks are more careful about risks, which they should be, then they're going to be less inclined to do some lending. So the crucial part is to have adequate information for banks to take these decisions, things like credit bureaus, things like adequate supervision, so that the banks can take on risks in a more prudent manner, but not fall into imprudent lending. The one aspect on Basel III that may be more relevant is if the authorities consider counter-cyclical measures, which are done in Spain and other countries for a while. And this is related to the provisioning rules. But I think the authorities were already on the way to Basel II. So from Basel III, many of the aspects are not binding, really.